All right, event trader here, and we are about to be joined by chart trader Brett Manning, of course. Brett, you there?
Yep. How you doing, Gav?
I'm doing okay. I'm doing okay. Just kind of trying to keep on top of everything over on this side here. Pretty busy morning. A few things going on, and market's certainly bouncing around a little bit here. So, how about yourself?
Yeah. I mean, I'm just trying to track the action and get a bias. I don't have a bias right now, so that's job number one.
Yeah, I would agree. It's pretty tough to get a bias. So I'll tell you what, Brett. Why don't we start off with this? Why don't you provided some thoughts yesterday on the market action, where you talked a little bit about this, what I've been calling a price discovery, and you had mentioned a sideways consolidation pattern likely to come following the bounce, and I think we're getting that certainly a wide range. So why don't you give us your market thoughts on what happened overnight, just kind of going through an hour by an hour look, and then of course that dip that we saw right around 8 a.m. Eastern time, and the bounce that followed. What what was going through your head for that period there?
So I think we're going through a process of trying to come to terms with what China is going to do with its currency. I think that's probably the main, the central macro input, more so probably than even Fed policy. I think that a lot of that, there's a lot of different ways to look at that. One is allowing the yuan to weaken significantly, especially now, would be a strong exportation of deflation from China. But also, and I think the more important point is that it would allow them to sustain taking a hard line in the trade war indefinitely. And I think the markets would be coming to terms with that sense of things, that this will become a bigger, more prolonged, more protracted process, because it appears as though this is an effective tool for China to battle back against the tariffs. And it looks to me like this morning, for instance, I think was clearly linked to the rip higher in the USD CNY rate. And I think that, the reason why I'm staying with my gold long past my outside target is because I think that, it's going to go higher, which means that yuan is going to go lower. I think that they're going to let it move past the levels we saw at the extremes from earlier this week, just to make sure that they've really sent the message that they've got something to fight back with. And I think that that's going to impact trading across the board.
Yeah, but I mean, they are limited to what they can do on that, right? Considering the debt holdings that they have. I know I was looking. I think external debt's roughly 65 to 70% of their foreign exchange rate, and China um, has approximately 2.2 trillion in U.S. debt, right? So I mean, all of a sudden, the companies that have borrowed in U.S. dollars, they have a lot tougher time paying back too. So they are pretty limited on how much they could let this sink, don't you think?
Yes, but there's two directions to that. So if they were to weaken the currency, it would stimulate their economy to some extent as well by making companies not have to reduce the prices on their overseas items, particularly items for sale in the U.S. market where tariffs are associated with them. So if they are, to the extent that they are battling back against the impact of the tariffs, at the same time that they are creating a dollar-denominated debt problem, they're also increasing sales volume. So
So supply
they're kind
side
of,
economics type theory.
well, I guess. I mean, they're opposing factors that happen at the same time as they allow their currency to weaken. And I think that taken to an extreme, you're right, there's boundaries here. But there's enough wiggle room that they can at least bluff powerfully to change the narrative that the playbook that's been coming from the White House. And I think that they would want to allow it to go further to really reinforce that. It's sort of like we talk a lot. We used to joke about the game of chicken and the idea that one side might just very visibly make sure the other side, the other person in the other car saw them unscrew the steering wheel and throw it out the window and put on a blindfold. that really kind of helps you win a game of chicken when you make sure the other side knows that, you're willing to go the distance no matter what, and you've removed any ability to veer or swerve. And I think that this maneuver kind of helps China establish the sort of predominant access to that strategy in this process. And I think that, to the extent that the Fed fights back against...
But the one thing I would say, though, is, I mean, and I know you're just getting into the Fed, you're talking about how that exports deflation from China. So doesn't that kind of force the Fed to press its foot on the pedal, too, from the inflation side?
Well, I was just getting to that. So it looks to me like the cultural process around the Fed right now is, I think, a very reasonable pushback against the idea that they should be what I would say is de facto under the control of the White House. Because if the White House decides we're just going to go to 50% tariffs on the $300 billion tranche, then the Fed would have to go cut rates 2 more times, and then the White House might double that, and then the Fed would have to cut rates 2 more times. And it just becomes a very clear process of that the Fed is enabling policies that may be destructive to the economy. And I think that we've already seen some kind of vocal pushback there, that they've already seen that this is their fate if they continue down this path. And that may be one of the reasons why the market is taking it on the chin so much, is because maybe the Fed is kind of ready to stand up and say we're not going to be a party to this process, because those tariffs will go on only if the White House thinks that for certain the Fed will be there to have its back. So it becomes a kind of enabling a drug addiction process. And maybe the Fed won't have the backbone to see that through. Maybe they will be fully complicit in just being a nationalist team player rather than an independent and objective force as far as counter-cyclical measures on the economy. I'm not sure. But we've seen a lot of at least intellectual pushback at this point, and we certainly won't see that from China in terms of its currency management. So that gives China an inherent advantage when you look at this as like a high noon duel.
Did you have any thoughts on the FX reserves? I know there was July data, so didn't fall as much as expected. It was a 15 billion drop. Expectations were for an 18 billion. So, I mean, I guess you could have the argument that they're not doing as much as some people thought to defend the currency. And then, of course, the pegging of the mid-reference rate at 6.9996. Obviously a biscuit shy of that 7 level. I know some people have been talking about that if they did peg it at 7, that would suggest a change in philosophy. I think that's kind of already underway, though, at this point.
Yeah,
right?
I think we've left a symbolic nugget out there, but there's a change in philosophy already, quite clearly. But it's again, it's a poker game. It's not an independent change in philosophy because of internal conversations. It's part of a negotiation.
Right.
So, it's politically resolvable. It's that's the one thing to keep in mind. Everybody should definitely keep in mind. The sort of things we're seeing here are all politically resolvable. Snaps of fingers could end the crisis. I mean, what damage we're doing in the process of this could then have a life of its own. But at the bottom of the pyramid is not financial markets. At the bottom of the pyramid is always politics. And when you have something that is created by politics, it can be resolved by politics. And that's very different from something like we saw in 2008, where we had something that was not created by politics at all. It was a cancer in the financial system. So this could turn into a cancer in the financial system. It could turn into a situation where we've gotten to an untenable amount of risk if conditions worsen to a certain extent, sort of like the tide going out. There's enough people without a bathing suit on that it becomes a big problem. But it's not impossible that this could be corrected very quickly in terms of a change in the course of how things are going. And given that the White House is headed toward an election coming up, it may be that there's a kind of sense of self-preservation that does step in. So it's possible. I'm not saying it's likely, but it's possible.
Yeah, no, certainly possible. And one of the things that I thought was interesting, Brett, and I know, are you still involved in your oil short?
No, I closed it yesterday.
So
I closed it right in front of API for, I made what I thought was a nice gain on that thing, 200 ticks, and I left 300 ticks on the table.
You're the worst.
Well, I mean, it really. I said when I took it, I wanted 50,
It's
and I
it's
just didn't
it's
stick with that.
embarrassing to the site, Brett. It's only 200 ticks. So no, but here's the question I wanted to have for you on the uh, on the oil play. Do you have any thoughts on the story? Now, there has been confirmed that China was going to no longer import oil from the U.S. Now, I don't know what the trade numbers are there. To be perfectly honest, it was just something that I saw. I didn't put much weighting on it, but I do believe that they're a pretty large liquefied natural gas importer from the U.S. here. Obviously, the U.S. now the world's largest energy producer here. Um, it's amazing with how weak the energy sector's been, and then you see a headline like this. How do you treat this action here? How do you treat that story, and does that play into how you would trade oil at all?
I mean, China's going to use the same amount of energy.
Right.
Either way, right? So I suppose that it could cause an imbalance in the spread of WTI to Brent.
Well, and you got to figure they're
But
also
it's also
going
just
to
a
Iran,
rumor.
right?
And
It's also
that's the
just
other
a
one.
rumor.
So, right, we've already started to hear some rumors that China's just going to start to basically just open up a pipeline with Iran.
Yeah.
And that would be just another example of the breakdown in the relationship between the United States and China. Everything goes onto the table. What does that imply? That implies China will be importing from Venezuela and Iran to solve any gaps that they have in oil supplies and be reducing their shale oil. I mean that causes actually some problems. That you got really heavy oil in both Iran and Venezuela, and you've got really light oil in the U.S. and it's better to kind of participate in a market that works as a functional whole. But I'm sure that if need be, they could find a way around those issues. And but I think the bigger thing is the conceptual and abstract point of every lever that can be pulled, since China's got the big trade surplus with the U.S., every lever that can be pulled, because they can't pull the tariff lever very much, is going to be pulled. And yeah, I mean, you've got let's hit the farmers, let's hit the shale drillers and the equipment and supply companies in the U.S. Let's hit different groups that have political action committees and have a lot of power and can really cause a big headache for the White House. And then let's mitigate the actual impact to our own companies in terms of in terms of sales volume by making their products more competitive by reducing the value of the currency. And if you just do all these things, then you can actually end up sticking it to the U.S. harder than the U.S. sticks it to you with a 10% rise in tariffs. And it performs a process of demonstrating to the White House that there is leverage there, and that this is not a situation where, I think that Trump came into this whole process believing that he could just pull the most simplistic of levers and get whatever he wanted in a heartbeat, because the U.S. was such an important market to China. There was such an imbalance there that, it was easier for us to survive without them than for them to survive without us. And that just implied a tremendous amount of leverage. And he sought to take advantage of that. And China's gradually going through the process of demonstrating that it's a lot more complicated than that. And I definitely think that the oil play is on the table, and I'm sure that the number one source of those rumors is China, and just kind of a lot of it is just showing what tools that we have more tools. They're just saying we've got more tools than you realized, and you need to think twice about just kind of diving across the breach. And I think that if push really comes to shove, and it may be that push ends up really coming to shove, it'd probably be a long time before that was really an enormously active part of the actual loop for oil. But it's not at all something that should be seen as impossible.
Okay. Somebody asking, Brett, and I'd be curious as to your thoughts on the instrument too. The question is, swing long in UWT, anyone? Levels near yearly lows back in December. What's your thought on the
for the
UWT?
oil for an oil balance play, basically?
Yeah, exactly.
I thought about it.
Three-time bull. I know you always play the futures to get your leverage.
Yeah. Well, the futures is going to be the reference market when you're looking at the chart. So whatever the UWT chart looks like, and this is something I want to say to make sure that if there's any one person who hasn't heard me say this before, it's super important to know this. The chart for UWT is completely meaningless. Never look at a moving average on UWT. Never look at an oscillator. Never look at a pattern of candlesticks. It's completely meaningless. Same with any leverage ETF. Same with any ETF built of futures contracts. The chart doesn't matter. Technical analysis on those markets means absolutely nothing because the degree to which you've got causality from a chart pattern, the chart pattern of reference is the crude oil chart, not the chart for some tiny derivative ETF that does nothing in comparison in terms of total volume. So that if there's a breakdown through a moving average in UWT, it's not going to influence the entire global price of crude oil, which it would have to do for that ETF to actually follow through on that technical break. So the only chart you need to be watching is the crude oil chart and not USO, because USO is built of futures contracts. So USO is highly misleading as far as what the chart pattern for oil looks like. So as far as doing technical analysis on the oil market, you need to be looking at the price of oil in a chart through time, not the price of UWT or USO or some other small-time derivative version of that price. So when you look at the price of oil right now, what you have is what I think is probably, I'm going to guess, is probably the first three legs of a descending triangle, with the third one coming to an end right now in this area. I think probably it will hold somewhere in this area. Probably it will bounce. This is just a guess. My gut feeling is it will bounce maybe up into the 53, 54 area from here, and then maybe move back down and test it again and then violate 50 sometime maybe early Q4. I think you've got probably a pattern that's going to take some time to play itself out.
Do you see it getting back to that 43 area, the December lows?
So oftentimes when you see this type of pattern, so you see a descending triangle and ascending triangle where the trigger line is significantly inside of a previous extreme, you don't reach that extreme again. But that doesn't mean it can't happen. A lot of times you'll see a violation down to a 47, 47.50 in a situation like this, and then it puts in a more substantial low. And the reasoning behind that would be, you get to a point, and what we just talked about with China notwithstanding, but you get to a point where you start to actually get to we've got a downward sloped line that represents how efficient United States, particularly share-related producers are in terms of where they can be profitable, what price of oil. And they've got a very flexible system now. They can reduce production or increase production depending on where the price of oil is. And at this point, it used to be 55, 57, from what I understand. There's a lot of companies that are more around 46, 48 in terms of where they can barely still be profitable, or where you flip across that line and they're no longer profitable. And so you might start to see that threshold down there tapped, where you start to get to the point where production is going to meaningfully reduce from the world's largest production center when you start to get below that price, and that might put in kind of a natural barrier on the downside. Obviously, if China turns on production from Venezuela and Iran full volume based on geopolitical matters, that could shift things a bit. But I would see the pattern from here. My gut feeling is we're going to see support hold along this 50 to 51 area, and then move back up maybe to 53 to 54, maybe even 55, and then move back down again and retest this level and maybe break it at that point.
Okay. Somebody asking about the long-dated treasuries here. I'll pull up the TLT for reference, but Brett, we talked about the positioning in that and how that this was ripe for a bit of a short squeeze, if you will, even with this extended move. I feel like we're seeing some of that playing out here, especially with those interest rate yields diving. We got the 10-year bond auction in about 25 minutes. You got any thoughts on the long end of the curve here?
Well, yeah, it looks like the question is a pretty interesting question, just saying, if you see that people are still short ZB, still short the 30-year bond futures, but it looks like, I know I'm not a big fan of DSI, so Daily Sentiment Index, I'm not at all a big fan of. I think it's terrible. They suggest that I'm a big fan of this. Or maybe, it looks like the word big it looks like the word big is in capitals, and I think that means that it's sarcastic, because this person does know what I definitely think. And yeah, I honestly I think that it's just almost made up. I think it's like a 5-period RSI or something. Like it follows the price so perfectly always and in every case. And I downloaded a ton of their data a few years ago and tested it, and it almost matches up with just a basic oscillator. I don't know whether that's necessarily true. I'm not making a public claim of something. I don't trust it at all. But the FMS most crowded trade, it looks like they're suggesting, and I can't remember this, but maybe it's true, that long treasuries was seen as the crowded trade in the last B of A fund manager survey. And if that's true, what I will say to that is that remember, and super important to remember, that that the judgment of what the most crowded trade is not necessarily the judgment of what people own the most of. It's what they think the most crowded trade is. So a lot of times you get people thinking just because something's going up a lot that it must be the most crowded trade. And I would suggest that if a fund manager is asked what they think the most crowded trade is, the one thing you're not going to hear is something that they're in, right? Nobody will willingly be a part of what they believe is an overly crowded trade. And the assignment of the concept that such and such is overly crowded is oftentimes, I think, kind of a sense of like, well, everybody's stupid for buying this, but I've, of course, dodged the bullet. And I think that if everybody's saying that about a particular market, it may not be crowded at all. So I think that there's the possibility of some really counterintuitive judgments where that survey's assignment of most crowded trade is. And yeah, it looks like in the last one, in fact, the last two, it was long U.S. Treasuries as what was assigned as the most crowded trade in the fund manager survey. And I think that it really doesn't mesh with what you see in the futures, but I suppose the futures may not in this case be a tremendously reliable judgment of the broader market, but it really was at the lows. It really was on the other side of this when we saw the biggest short interest ever in the futures market. That pretty much marked the bottom in bond futures, and it was a good contrarian signal. And so one would suggest that the contrarian signal now is that this has got a much bigger squeeze in front of it, and that we're going to see new all-time low interest rates in the 10-year and the 30-year, and that'd be backed up by the type of quality we saw in the last couple auctions. So actually it would not be. But either way, the fact that we're seeing the squeeze that we're seeing now, I would also probably suggest that we're going to get new CFTC data on Friday, and I'm going to bet it's no longer net short. And I think probably what we've seen over the last 5 days of movement, because so the CFTC data comes out on a Friday, end of the day on Friday, but it does not reflect up until that moment what positioning is at. It reflects actually up until Tuesday. So this Friday, we're going to get data on the positioning as of yesterday evening. So last Friday's data was the positioning as of 7 days ago yesterday evening. And that would mean the entirety of the massive squeeze that we've seen in something like the ZB or the ZN was all outside of the data set that shows people are still net short. And so I'm going to take a wild guess and say that there's probably a ton of short covering that's been happening in the last 5 or 6 trading sessions, and that we're going to see a very different picture when that comes around. And if it's too different a picture, then maybe all these things start to line up, and we have a chance of retesting the lows, but that becomes a very definitive downside barrier. So we'll have to see.
All right, so we're seeing an attempt at a bounce here midday, Brett. What are some of the patterns you're going to be looking for in this afternoon to kind of help decide? Are we looking at a buying or shorting opportunity here?
So for the same reason why I'm letting gold run further, I'm actually starting to just kind of have a tough time not leaning toward the short right now, because I just feel like we're going to see a little bit more of a shot across the bow from China overnight tonight or tomorrow night, that they're going to let it run another level. and just to really kind of show that they can and they will. And I think that markets are going to react to that. I think that oftentimes when you see a new sort of intermarket variable really pop up and become the main thing that people are watching, we've seen this with lots of different things in the past, where a certain market relationship will become all-consuming. And you see the equity markets trade almost tick for tick around it. Normally what happens is we go through a process of maybe a week or two where that's the case, and then people kind of acclimate to the new thing that's happening. You see this with breakouts. You're seeing it now with a breakout. With the breakout above in the USD CNY above the 7 level, it's put everything on the radar. Some months ago, we saw it with interest rates, oddly enough, breaking above a certain level, and it became the bond market that everything was running counter to. You see it over time in lots of different market situations where a particular market breaks out to new levels, and then it becomes this drama where the stock market goes down if it ticks up, and goes up if it ticks down, and that process plays itself out for a few days, and then we kind of acclimate to the new levels and the new situation. And once we do that, they kind of diverge a bit, and it becomes less of a sticky, algorithmically driven kind of trade. But I think that if we're going to see China let it take another level, then it's really hard for me to put myself in a position where I want to be getting long now, because I think that other people are going to see that same likelihood, and probably those people are on the offer, and we're going to be running into a relatively stiff offer to work through.
All right. What other markets are you watching right now, Brett, that's piquing your attention?
Well, I mean, I'm kind of, I'm going through watching gold with a piece long gold and trying to figure out, it's now out, it's not beyond my outside target. So this trade, I had 1,500 outside target. We're at 1,520 now. Normally, I would have just closed it out when it hit my outside target and forgotten about it. But I really do kind of feel like, I may just let it keep running, and I feel like 1550 is a decent area. That'd be another 30 handles.
Yeah.
And I think then we'd really penetrate into that range that defined the highs from 7 or 8 years ago, and that's probably a decent spot to look to bank the whole thing.
You got a preference on which index you'd like to go after if you do short? I'm assuming the NASDAQ, or
I kind of lean that direction. I don't know. It depends on which, the pattern just feels just right to me. And oftentimes it doesn't matter. And I saw somebody writing in earlier that they wish that I traded more individual stocks. Well, I'll tell you what, when the VIX is above 20, if you can probably short any large cap if you think I'm going to be right and I put a short on the market. So it's like I'm trading individual stocks. So just, you can take it that way. If you think I'm going to be right, if I short this market later today and I turn out to be right, given where the VIX is, correlation is going to be really high. You could short Microsoft or whatever you want, because the market is going to move as a single whole with a VIX above 20 if we start to go to the downside. There's not going to be anything that survives unless it's a smaller cap and it just had earnings. Otherwise, everything is going to be on the same bus. So you can take it as an individual equities call.
That's definitely a good point. So this afternoon, you think you could be active, or you see yourself maybe get more active? Obviously, you're waiting for the pattern to play out, but do you see yourself just getting a little bit more active overnight? Because I know you were waiting for possible headlines out of China as one of your theses for getting short.
There's going to be some of that. Yeah, there's going to be some of that. I mean, I think that if we get a really blowout to new lows, there's going to be a point to kind of look for that overnight into the close in China buy of the U.S. market. But I don't think that we're there yet. So what I normally do is I say, no, I don't think I'm going to be active this afternoon. That usually means that 10 minutes later I'll post a trade. So I'm hoping to see a setup that I can't possibly ignore. Right. I don't see one right now. I see a market that's pretty choppy, even though there's a bit of a wide range. But, I don't see a lot of clear directional cues in the pattern. So in 10 minutes from now I may see it in a different light, and it will push me into action. So I don't know the answer to that.
Game theory, what do you think the next step? China, you talk about China ratcheting up things a little bit further. What do you think that they could do at this point?
Like I said, just let the currency go a bit further.
Just let the currency go a bit further, okay.
I think just show that that's, they've got that tool, they can do that, and, make sure that, I think it's from their perspective, from game theory perspective on their side, it's about making sure that the United States realizes that they have the tools to combat endlessly escalating tariffs, because that's been the assumption from the White House, that they can just always go into deeper water. It's like somebody, who goes into the deep end of a swimming pool who's 10 feet tall with somebody else who's 5 feet tall. They could just go deeper into the water and still breathe. And by China just showing them these different tools, and the oil tool is interesting, the farm tool is interesting, just different tools that show that they can, have stilts in the deep end of the pool and make themselves behave like a 10-foot tall person, then that really decreases the likelihood that the U.S. will want to go much deeper into the water. And I think that's what they're trying to do, just signal that they've got tools to mitigate the downside and amplify the upside of any one of their strategies.
Yeah, and I guess they also have a little bit of a wounded animal mentality where they're already seeing a lot more pain than the U.S. is here, right?
Sure, but again, this is something we've talked about a number of times. The people who are making the decisions aren't seeing any pain.
Yeah.
There's much more of a translation through to the leadership here in the United States.
Well, it was funny, though. I did see that. I think it was Kudlow said that they could go after individual wealthy
and do what?
Chinese members.
And do what?
Yeah, it would be similar to what they did with Russia. I guess. Yeah, exactly. I don't know exactly what they could do, but you're talking about the people getting hurt right now, not being the political side. I just thought it was interesting they were talking about going after that side.
I understand, but I don't see how they can really
the Global Magnitsky Act, which would sanction top officials in Xinjiang, China.
Okay. And that takes it to another level of finding out whether or not our allies behave like we want them to, given how, things have deteriorated with a lot of our relationships around the world. And who knows what would actually happen to the quality of life of people there. But the big point is, if things go really wrong in the United States economy, then the leadership here that's making the main decisions faces an election very soon. And they could be out of power, out on their butts. And for most people who are involved in that could be, a big negative turn of events in their lives. The leadership in Beijing is in there for life. They live in a walled city and they control the internet. So, no matter how things deteriorate in China, the just strictly speaking from the perspective of any one person who is a top bureaucrat in China, in Beijing, or Xi Jinping himself, the change in their quality of life, no matter how this turns out over the next year, is going to be negligible. So even though they really want things to go well for their country, and I'm sure they actually do, there's not the same personal threat in terms of how the consequences of this situation play out in their lives. They're completely protected from that unless there's a revolution. And there wouldn't be a revolution, I would think, unless things deteriorate on just a massive scale for an enormous period of time. So they're just totally isolated from the practical day-to-day effects. They want to win in a game that's a very abstract game to them. And in the United States, it's very real for leaders. So bluffs may be much more powerful coming back at us than they would be going out to them. And that's a principle that I've held right from the beginning when we first got the whispers of this trade war, that I thought would be a controlling principle. And I still completely believe that.
All right. Well, Brett, then, any parting shots that you want to do here?
No, well, the main thing is just, hey, volatility is fantastic. If you're careful, if you're disciplined, if you treat it right, this is when you make all the money. And if it goes down further, it's only going to get more volatile. It's only going to mean you can make more money. Just be selective, be choosy, be limited with risk, be disciplined. Let things run when they're going to run. Cut it off quick and throw it out the door when it's not working. There's going to be another bus coming around the corner just any minute. Just kind of get into a rhythm with the market. We've seen a couple days of volatility that establishes a wider range principle that gets back into what you were talking about with price discovery. That's the most that when things are a little bit loosened up, the algorithms back off the inside market a bit. It's not just so controlled tick for tick. There's this process of feedback that happens in both directions. You've got serial correlation. As people are uncertain, they don't know what's happening, the market starts to move, a percent can go really fast. People jump on one way or the other because they think that everybody else knows something they don't. So you get bigger follow-throughs to every breakdown, bigger follow-throughs to every breakout. It's a much easier type of market to make money, and you don't have to rush it, you don't have to force it, but just kind of, it's a good mindset to realize that this is a much more opportunistic situation than we were seeing a couple weeks ago. So, this is This is really where the opportunity lies, I think, in a market context like this. But stay disciplined, stay selective.
All right, all good ideas there, Brett, and all good rules to follow as we're trading along here. So, all right, Brett. Well, I'll tell you what. I'm going to leave the line open in case there's anything that pops up that you want to make a comment on. But we'll also be keeping a close eye out and looking to see if you do any trades this afternoon on the short side.
You got it.
All right. Talk to you soon.
Okay.